Welcome to simplifyingcalculation.com. This video is on our SBA 504 loan calculator. Um, SBA 504 is one of the two main, well, we also have SBA Express, but it's one of the two main SBA lending programs, the other one being SBA 7A. And we have a separate video and software for that as well. So right here is the SBA 504 loan calculator. Right here you can see the software functionalities. We also have an SDK available for this software. So if you're a business advisor, a broker, lender, and if you have your own website and you would like to have the software on your site, you could just simply click here and it will lead you to all the directions to get that done. So here is the main software. So here we have the purchase price, or if you're refinancing, it could be the refinancing balance. But for this this video, let's take an example. Maybe you're a manufacturing company, or maybe you're a medical or dental, practice, and you're looking at buying a building or a condo for your practice. So that would be considered as owner occupied, and so then you would be eligible for an SBA loan. For most SBA loans, the requirement for owner occupancy, that means your business has to be occupying the building, and that threshold is, I think, at 51%. So you have to be the majority tenant, so to say, in that building, and then you can maybe lease out the rest. Also for construction, I think the requirement is higher, and these keep changing over time, so just please check, but I think it's 60%. So let's get back to the software here. This is a purchase price. Let's say it's $1 million, and let's say you're medical dental, right? So you're doing a lot of tenant improvements and fixtures. So let's just say like you spend $700,000 on setting up the place. So that's to buy, that 1 million is to buy the building itself, and this is to improve the building. Maybe it also includes equipment. So here's a breakdown. We have a section here that gives you a breakdown of the build out. So let's say that you have the fixtures here, and these are all the tenant improvements, and these tend to be a big chunk of the breakdown. So let's say 300,000 for the improvements, and then we can go to furniture. Let's say 50,000 for furniture. Okay, and then we can add another item here. So you can actually have a breakdown, itemizing all your construction costs. Let's say this is for equipment. Let's say 200,000 for equipment. And then let's say this is like soft costs. If you're, for example, if you're buying a building here, you probably have to pay for different, definitely appraisal, maybe environmental. So there are different legal fees. So there are other soft costs. So let's say like maybe 25,000. So right now this tells you basically you have 125,000 left to itemize. This is based on this 700,000 right here. So let's just use renovations, or let's just say other construction costs. And let's put that at 125. So now we have the entire thing itemized. So the total project cost is 1.7 million. We also, right here, we also have this helper function. So if you wanted to for the first time, if you're trying this out, you can take a look at this helper function. It gives you a description as to what each section does. And you can actually, and this is for the entire software, so you can go step by step, and it tells you exactly what these are. So right here we have 1.7 million total cost. If you're a manufacturer or a green business, the advantage here is that the CDC loan can go up to 5.5 million. So if you're doing a big project, big projects, let's say like 10 million or even over, there is clearly an advantage if you are classified as a green business. Here we have the breakdown of the SBA 504. In most cases, it's 10% down. So 10% of 1.7 million is 170. This is the bank loan one. So this loan is, through your lender. So it could be a bank or a private lender, SBA preferred lender. So they will do the first loan, and they will do 50% so of the total amount. So 50% of 1.7 million is 850, and here you have the term. Let's say it's a 10-year term. Amortization 25, 6% rate. This is a CDC loan. So this is a second loan where you actually work with a CDC. These are certified development corporations. They're spread across the country, and they will do the second loan, and also they will take a second lien. So this is the thing about 504 is that there are two separate liens, one from bank one and then the other one from the CDC. So that will be your second loan. Let's say it's a 20-year loan and 20 amortization. It's fully amortized, so it's fixed for 20 years and it's paid off in 20. That's what this means. This here, 1025, means it's fixed for 10 years. The loan is amortized over 25, but at year 11, you would have to refinance again because the term is only 10 years. So just you gotta keep that in mind. Here we have the bank loan one fees. So this is 1%. Your lender charging you 1% of the fees. Bank loan two. This is the CDC fees. So this is the breakdown for CDC fees, because they actually have multiple different. They have a different fee structure where you actually have broken down between a guarantee fee, a CDC processing fee, a document fee, and then legal attorney fees, and that could range anywhere between 2,500 on the lower end that I've seen up to as high as 10,000. Could be even more in some cases. It depends on what you're dealing with and where you are in the country as well. So that's the breakdown for the SBA CDC fees, and we just resubmit here. This is where you have all the responses, all the calculations. So this is your monthly payment for your SBA 504 loan 1, your fees, and this is the total interest paid, over the life of the loan. This is your CDC loan 2 fees. The monthly payment is $48.71. These are all the fees again, and this is the total interest that was paid. Obviously, you understand that this is a smaller loan compared to this one. Also, I think this was amortized over 20 years, and the other one was over 25. So 20 years and that's 25. So this is going to be a smaller payment just based on, but it is a bigger loan amount. So that's the other thing. All right, here, back to the calculations here. And here are the payment details. For example, if you have your fees amortized, so as you know, there are a lot of fees that come into play when it comes to an SBA loan. So in some cases, you can roll those fees into the loan, as long as the appraised value is also sufficient, and you're not crossing any kind of thresholds or dipping below certain thresholds. So if that's the case, if you're fine, if you have enough equity and you can get a bigger loan amount to amortize all the fees into the loan, so there's nothing coming out of pocket for you guys, in that case, this is going to be the monthly payment, because now we have a slightly bigger loan. So monthly payment is for loan 1 is 5,531 compared to 5,476. So it's a little higher, as you can see, and that's every month. And the interest paid is obviously also higher, right? 800,000 over the life of the loan. Same thing here. Here we have $5,012 up from 4,871, and total interest paid is also higher from 489 to 503. And here we have the visualization as well as the table. This is the amortization table or the schedule. This gives you a complete breakdown on a monthly basis between the principal and the interest and your remaining balance after the end of each month. So here you can, this table is right now that has been selected. You can actually select any table. As you know, there are two different loans and two different scenarios for each loan, with the fees paid upfront and the fees amortized. So we have all the tables here. You can just click on it and it leads you here. This is the next section where, or the last section I would say. This is the prepayment penalty. So this comes into play when you're actually working on paying the loan off or even paying the loan down, before the term expires. So SBA loans tend to have a prepayment penalty. SBA 504 tends to have a 10-year prepayment penalty, and I think compared to SBA 7A, I think it's a 3-year, but 504 is a 10-year penalty. That is one of the main differences. So 504 is typically used for long-term projects, real estate, construction, and not necessarily short-term. But once again, that depends on your scenario. It's best to work with, talk to lenders and maybe your accountant, your CPA, to make sure you choose the right option for your business. So this is the prepayment schedule for the entire 10 years, and here we have information, literature on the SBA 504, loan requirements, structure, fees, application process, use cases, and here are our other SBA softwares. This is SBA 7A versus 504. So this actually does a side-by-side comparison, between a 7A and a 504. If you're an entrepreneur, if you're looking at getting an SBA loan and you want to get the complete breakdown and calculations for both loans, this is software for you. Gives you a comparison side by side. SBA Express, this is for smaller loans, typically below $500,000, in some cases 350. So that threshold itself changes. Sometimes the SBA pushes that limit up to 500,000, and other times it's back down to 350. This is SBA 7A. Once again, this probably is one of the most popular SBA programs out there, SBA 7A. So this software does a complete analysis, detailed calculations for an SBA 7A. Hope this video was of value. If you have any questions on the video or the software, feel free to send us a message. Thank you.